with a very warm heart that we welcome you to today's episode of Tax Matters. My name is Olumuyiwa Matuluko. How's your week been and how is business going? Brand new month, brand new set. We hope you like our new set. The third International Conference on Tax in Africa, organized by the African Tax Administration Forum, ATAF, has come and gone. It was held in Abuja between the 26th and the 29th of September 2017 with the theme, Building Strong Domestic Tax Regimes in Africa, Strengthening VAT, PIT, and CIT. Now, those are three important taxes. Value-added tax, the most prominent indirect tax in the whole wide world. VAT is levied on the final consumer of goods and services. It is operated under different names in all parts of the world. Value-added tax, general sales tax, or simply sales tax. Personal income tax is charged on the incomes of individuals, whether in paid employment or in self-employment, while companies' income tax is charged on profit of corporate organizations. One other topic that was very prominent, that came up prominently during the four-day conference, was transfer pricing, or what the experts have twisted to mean transfer mispricing. And what are we talking about? The antics of corporate organizations in playing around with their books with a view to lowering their tax obligations, their tax liabilities, and running away with huge profits. Permit us to go into our archives and bring you a clip from one of the episodes of the year 2013, which will explain to you what transfer pricing means. What exactly is transfer pricing? Why has it become a problem for the taxman?
I will just make a very common illustration within our society. We know that Nigeria, we have about 60% of our population engaged in agriculture. So let's look at a simple business. The husband is a farmer producing yam. The wife sells pounded yam. Okay. Now, the wife who sells pounded yam has a choice to buy yam from her husband, the farmer, or to go to the market to buy yam. Now, if he goes to the market to buy yam, he's buying from somebody probably he never knows. And therefore, they will argue on the price. And the woman will ensure she gets the best price. Yes. The seller will also ensure he or she gets the best price. Howbeit, her husband is a producer of yam. So she can as well go to her husband and buy yam. Now, the question now is, at what price does she buy from her husband? Now, if she buys at the same price, which she will have paid if she had gone to the open market, then we can say there is open market price, or what is called arm's length price. But if because the husband is her husband, and she just go there and say, look, I give you what I think I can give you, or the husband insists must pay one price, which probably is going to be higher than what the woman would have paid in the open market, then transfer mispricing has occurred.
Mispricing?
Yes. So the issue, therefore, in transfer pricing is actually not transfer pricing, but the issue is mass transfer mispricing, where prices are not at open market prices or at arm's length prices. The implication of that for taxation is this. We all know that the taxman is majorly interested in profits. You only pay taxes as a business if you make a profit. And there are two principal elements that determine profits: the price at which you sell your products, the cost at which you buy your inputs. Now, if you are selling to an open market, you want to get the best price for yourself. And by getting the best price, you are maximizing your profit. In the other way, if you are buying your inputs from the open market, you also want to bargain the best price such that your cost is minimized. Again, you are maximizing your profit. Now, if you now have to buy or to sell to someone who is related to you, and the price agreed is not an open market price, then either of two things will have happened. Either one, profit could have been increased out of proportion or will have been reduced out of proportion. And which means that we're now looking at where these transactions take place across international borders, which means that the two of them are subject to two different tax jurisdictions. Then what happens therefore is that profit will have been shifted from one jurisdiction to another jurisdiction. And then it will be a loss in one jurisdiction and unexplainable gain to the other jurisdiction. That is why the taxman is very, very concerned when transactions occur between connected persons. And the concern is, what price did you use? If it is open market price, there's no issue. But if it is not open market price, then the taxman wants to say, we need to look at what is the open market.
That was Mr. Matthew Bonjubola of the Federal Inland Revenue Service way back in the year 2013, when transfer pricing was just gaining currency, at least in these parts of the world. At the third International Conference on Tax in Africa, 2 documents were launched on transfer pricing aimed at equipping tax collectors with the necessary skills that will enable them to detect the transfer pricing schemes of companies.
Now, this might seem like a little ceremony, but I honestly believe that the impact that this will have on the African continent is tremendous. So for our development partners, on behalf of Africa, we'd like to say thank you. And of course, God bless you. And I'm sure that as we use this manual or this book, this little book of information that has great impact, I'm sure this is the beginning of the change of the revenue profile in Africa.
As you heard, those 2 documents were products of international cooperation, and that's the way it should be. Earlier at plenary, at session 14 of the various panel sessions of the conference, Mr. Bonjubola and Ms. Redhead spoke about the documents.
I speak as the chair of the cross-border technical committee of ATAF, and is a committee that is made up of members from 9 countries. We have been able to deliver 2 tools that are already out there. One is the risk assessment tool, which is a tool that is used to select cases for transfer pricing examinations. The second product is the suggested approach to drafting transfer pricing legislation, which the committee had worked on for some time, and today we are presenting for public consumption. The product itself contains both primary legislation suggestions, that is, provisions that we could put in the income tax laws, and also the draft of what we suggested could go for the transfer pricing rules or regulations, as the case may be. And of course, there are also suggested forms that we could use to gather returns from taxpayers. This is homegrown. It is not a copy and paste item, and therefore we can say it is an African product developed by Africans and also for Africans.
The second document, a toolkit they call it, is on transfer pricing, all right, but it is product specific. It is on transfer pricing risk assessment in the African mining industry.
I'm here on behalf of GIZ and ATAF to together launch a toolkit for transfer pricing risk assessment for the mining industry. So we've heard a lot over the last few days about the importance of tax authorities understanding the industry and the taxpayer that they're auditing. And I know that mining is a very relevant industry for many of your countries. You rely to a great extent on revenues or potential revenues from the mining sector. Consequently, any transfer mispricing or tax avoidance that happens in that sector is likely to have a very significant effect on government revenue collection and expenditure. So that's why ATAF and GIZ saw it fit to develop a toolkit that would help African tax authorities to better understand the transfer pricing risks in the mining industry specifically. As I said, many of your countries, you have a great deal of mining activity going on. Much of that is done by foreign multinationals. They export their product abroad, often in unfinished or raw form. They sell it to related parties offshore. Consequently, you're not confident always that you're getting the real value of the mineral product and collecting the right amount of taxes. Similarly, they often procure the vast majority of their mining inputs, equipment, machinery, and so forth, again, from related entities offshore. So the risk of transfer mispricing is great in the sector. However, I think the good news is that there is opportunity to get a handle on transfer mispricing in the mining sector in a way that perhaps isn't possible in other sectors like telecommunications and these sorts of more elusive industries. At least with mining, you can't move the mine. It's there. And hopefully this toolkit helps in terms of understanding some of the particular transfer pricing risks in mining. It's targeted at tax authorities for yourselves to use, to integrate into your existing risk assessment processes, to provide some insight into the sector, to provide the sector-specific expertise that you need to be able to detect and mitigate transfer pricing risks in the mining industry. It covers 4 areas of transfer pricing arrangements that are commonly found in mining: offshore marketing arrangements, the use of intercompany loans, procurement services and management services. Looking at marketing arrangements and intercompany debt is very important because these are areas that really do present an enormous risk to revenue.
Ms. Redhead, give an example.
The Australian Tax Office has just won a case against Chevron Australia, the subsidiary of Chevron, the oil and gas giant, with respect to an intercompany loan arrangement with its affiliate in Delaware, where the affiliate borrowed $2.5 billion in the US. It borrowed it for about 2%, and then it lent the same amount to the Australian subsidiary for an interest rate of 9%. So obviously concerns about Chevron stripping profit out of its Australian subsidiary via excessive interest deductions. So you can see that the risk to revenue is really very significant, and even a small percentage of these transactions means a lot for many of your countries. Transfer pricing risks and your understanding of those risks really depends on your knowledge of the industry as well, which is why having a knowledge of transfer pricing arrangements in mining is so critical to make sure that you really secure mining revenues.
London, New York or Lagos, business or holiday, home or office, you can now carry out your tax transactions from anywhere in the world. You can now file all your tax returns, pay online, get a receipt and even process your tax clearance certificate from anywhere in the world online and in real time. All you need to do is log on to www.firs.gov.ng and click on e-services and be introduced to the world of innovation, convenience and transparency from the FIRS. You can also pay stamp duty as you register a new company with the CAC or for other transactions that require stamp duty payment online. You can also file your withholding tax returns and determine the withholding tax deducted from you is in government coffers so that you can get your receipt within 45 days as long as the deduction has been remitted. Yes, all of this and more online at www.firs.gov.ng/e-services. FIRS, making tax administration as easy as ABC. Please note that all FIRS services are free of charge. This message is from the Federal Inland Revenue Service. It pays to pay your tax.
Welcome back. You are still on to Tax Matters, and we are once again telling you the story of the 3rd International Conference on Tax in Africa, held under the auspices of ATAF, the African Tax Administration Forum in Abuja. The African Tax Administration Forum has proved to be very, very beneficial to the member countries. How did ATAF start? Alhaji Kabiru Mashi, former chairman FIRS, was there at the beginning.
Ifeoko and myself supported the creation of ATAF. Ifeoko started it, then I followed up to see that Nigeria becomes a member, and I'm happy Nigeria is a full member now. The whole idea of African tax agencies coming together is to assist each other in capacity building, like transfer of staff to go to the agency of one country and see how they do it and come back to impact what they have learned. Then, like these conferences where ideas are shared in order to see how revenue can be collected efficiently. So that's some of the ways ETAP can build a strong revenue administration in Africa. And I'm happy that Nigeria is now the chairman of African Tax Forum. And I'm sure with the coming together of the African countries, a lot will be achieved by the revenue agencies.
Yes, indeed, a lot has been achieved. We wonder the knowledge that has been shared, the ideas that have been exchanged. Are you convinced that they will move us closer to our goal of building stronger tax economies across Africa?
Well, certainly. With even the last activity that we just had, with the launching of that book on transfer pricing, especially in the mining sector, that book alone is enough to transform the financial profile of Africa. So certainly a lot of discussions have gone by, a lot of new ideas have come into play, and I'm sure as the Commissioner Generals go back to their respective nations, they're going back with a lot of new ideas.
Tax Matters spoke to other conference participants. Are we making progress in the area of transfer pricing?
Yes, I think we're making a lot of progress. So under the ATAF OECD partnership, also with the World Bank Group, we currently have about 16 programs in Africa, bilateral programs, which usually last 2 to 3 years, where we're helping those countries to build the transfer pricing capacity. So that's both in terms of skills building for the tax auditors in the tax administration, and also for changes to domestic legislation. So recently Zimbabwe changed its transfer pricing legislation with assistance from this program. Malawi in 2017 changed its transfer pricing legislation with assistance as well. And we are also seeing an impact on revenue collection. So in less than 2 years, we've seen an additional $120 million of tax collected from transfer pricing audits in a number of African countries. And when you compare that revenue yield with the cost of providing the programs, you've got a revenue yield of about $800 for every $1 spent. So we're certainly seeing an impact. There's still much more to do, but we are seeing that impact starting to take place. And also by introducing new rules based on international standards, you're also seeing a clearer and more transparent investment climate being created for business in Africa.
When we come to this kind of forum and we hear about the multilateral organizations, yes, majorly from the West, trying to help with capacity building, yes, and all that, we begin to wonder, naturally somebody with an advantage doesn't like to give it up. Mm-hmm. The multinationals are situated in some of these countries. Yes. They've been accused, rightly or wrongly, of aggressive tax planning, yes, bordering on avoidance, moving towards evasion in some instances. Why do you people think that the West, using it in a loose term now, yes, can be trusted in helping us to understand the antics of their own people?
If you observe a number of multinationals, because they are multinationals, they have incomes from many countries. Yes, there might be companies that have been set up from an advanced country. But for Nigeria, for example, Shell has a huge income from Nigeria. I don't think what they make from Netherlands is as much as what they make from Nigeria. And so it's critical for the Netherlands Tax Authority to collaborate with Nigeria Tax Authority, to share ideas and share information, where, especially given that we have a treaty, to ensure that the taxpayer is paying optimally both in Nigeria and Netherlands. And for Africans, for example, there are companies that are, very strong in both Nigeria and South Africa. So working together, we can do a better monitoring as tax people of exactly what they are reporting. Is it optimal? Are we seeing the full picture? So there's always an advantage in sharing information. The global climate today, especially in the tax arena, is collaboration between developing and developed country, because we are all after the same goal. Tax man is after the same goal. No matter where it comes from, you're pursuing the tax money for development. And they need money for development. They depend on tax more than many of us. So as many countries that can collaborate with them to optimize the tax, they're ready to collaborate. So that we see a change in attitude of many advanced countries. They're reaching out to collaborate because their biggest taxpayers back home have tentacles in our countries, and they want to know what's happening to help them. Also, we want to take our share that's due to us. So collaboration is taking place.
Somebody who has advantage really wants to give it up, naturally. How much cooperation do you think African countries can get from the home countries of those multinationals that are engaged in these tax planning schemes?
Yeah. I think the answer to that is, again, exchange of information, and you need to have the mechanisms in place. In other words, there must be multilateral agreements that are signed, and it must be implemented in your legislation, that you can actually share taxpayer-specific data. So what you have is currently there are things like automatic exchange of information, by means of which you can get data dumps from another partner country and compare that against the data you have of that taxpayer in your own country, and you can then see what the discrepancies are. And in that way you can identify where the money is going, what profits should be in the country and which funds have been shifted out of the country. So the mechanisms are there. The question is, are we actually implementing them on the continent, and are we using those mechanisms to the best of our advantage?
Do you believe that the multinationals will easily give up? Will they allow us to stem the tide of transfer mispricing?
Before we talk about the multinationals, we should look inward. When you go into business, you want to maximize your profit. It is the duty of those in government to see, particularly the tax authority, to really equip their staff to how do you deal with transfer pricing issues. It's a common phenomenon. The moment you are building an octopus business empire, you want to play the games around the profit. So the first point of call is to be able to undermine the pricing, so which we call it transfer mispricing now. So it is both the taxpayer's behavior as it's growing bigger and bigger, and every taxpayer wants to be bigger, and forget about whether we have a multinational. It's the same tendency of taxpayer, whether they are based in Europe or America or advanced world, and that's why it has been a big challenge on the tax authority globally. And what will happen in Africa is that the tax authorities are weaker in terms of ability to combat them. So what then to do that is to now equip the staff with the tools to deal with the matter. Let us train the staff, let the staff be motivated, and they will go it. There is a lot of erosion that is going on, and will continue to go on by the multinational. Their accounts, their books are well prepared, well dressed up, but it's an assembly of tax planning and in an advanced form. So the person who will unlock or dismantle that scheme too must be knowledgeable.
And from the chairman of ATAF, in your capacity as chairman of ATAF, have you found the Western nations cooperative enough? Have you found the Western countries or those multinationals willing and able to cooperate with us in achieving our aim?
Well, I mean, the business community in some of the Western countries are not even cooperating with their own national governments, talk less of foreign governments. But these particular, what I'll call the development partners, like GIZ, OECD, and the likes of that nature, have come up with a very, very objective approach of fairness. And they have tried as much as possible to transfer certain levels of knowledge to us in terms of ensuring that we can maximize our revenue potential. And the issue of transfer pricing is not only something that affects Africa, it also affects Europe, affects the USA. So it's something that we are all trying to put hands together and make sure that we get our own good and fair share of our own revenue.
Transfer pricing, transfer mispricing, call it what you like. What is important is that we have now made you to know that the news is tightening. The tax collector is becoming sharper, more nimble-footed, more knowledgeable. And so it is in your interest to do the needful. Keep records, organize your books in a positive way, pay due taxes in due time. We like due process, and so it is time for us to move on for the next program. But we'll be here again next week. This same station, same day of the week, same time of the day. Have a beautiful week ahead.